You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. Well, today it's July 27th. Fed rate hike expected shortly, 75 basis points. Some out there are predicting as much as 100 basis points or a full percentage increase in rates. Still the yield curve is inverted, and how much difference this will make is a good question. But let's find out. We got Dee Carter on dcarterfinancial.com, and I should say Carter Financial. And Dee, it's great to have you back on the show. So rate hike on the way, earnings are coming out less than stellar, and inflation continues on. This thing is a big mess, isn't it?
You know, we got some numbers out there right now, Kerry, that are amazing. I've been doing this business for a long, long time, and we've been tracing and following for example, we're talking about a recession situation right now, and I believe, and I think you would agree, that we are in a recession, regardless of what the White House might say. But these numbers, as you talked about, the inversion thing, the two-year Treasury going up to over 3%. And the 10-year dropping down to under, close to 2.8. That is an indication of a recession, if nothing else is. In the past, it always has been, and I think we can see that would be the case as well. Earnings are up. Here's what's happening. It's funny. We've got some dichotomies here. We got some things that appear to be strong recession situations, and yet on the other side of the coin, we see earnings are up a little bit. We see the unemployment is at about 3.6%. We got some numbers out there that don't seem to agree, but I think you and I would both agree that with the market like this, we've lost $7 trillion in the market since January. We've lost $1 trillion of cryptocurrency value since January. This is the first time, if they don't declare a recession, it'll be the first time since they started keeping records of this sort of thing in 1949. Well, in 49, they didn't declare it because they didn't exactly know what they were doing at the time. But after that, every time we've had a 2 quarter in a row where the GDP dropped below or had a negative figure, they declared a recession. And that's probably what's going to happen right now. I don't see how we can avoid it. So, yeah, there's a lot of strange numbers going on, but it all points to the fact that we need to tighten up a little bit because it looks like things are going to get kind of rough over the next, I'm going to say 6 months to maybe 2 years.
Yeah. How long do you think the recession will go? Like the normal thing post-World War II is like 9 to 18 months. Is this one going to be worse because we went so long since 08 and 09?
It's possible it could go that long, and I think a lot will determine what happens in November during the elections. Depends on who gets the Congress and the Senate and what happens there as to what happens. I think there might be an upsurge of maybe more of a positive attitude if the people that are in power right now lose that power, and we have maybe some cooler heads prevail. It'll depend on what happens there, but I think once we get past November, we're going to see a change in the last quarter, but I think it could be 9 months to a year before we get out of this recession from where we are currently.
And so some have speculated that the Fed is just raising rates now so that they can cut them later. Is there any truth to that?
I read about that. The B of A people are saying that this could be the last rate cut we see, or the rate increase that we see. We maybe see some rate decreases starting in the fourth quarter. I don't think that's going to take place. I don't see how, under the current economic situations, that could take place. So I really do believe that we're going to see I think we're going to see 3/4 point here later today, and perhaps, as you mentioned earlier, it could go as high as a full percentage point. It's a 50-50 crapshoot on that. I'm not sure which way it's going to go. And I don't think anybody else is either. We know it's going to go 75 points because they've already said they were going to do that anyway, but it may go as high as 1. As far as reversing that trend, as early as next year, early 2023, Man, I don't see how that can happen under the circumstances in which we're living right now. We're paying, regardless of what they say, we're still paying way too much for gasoline. I love it when the government says, "Look what we've done for you on the gasoline prices," and yet they said they had no effect on gasoline just 2 months ago. So it's pretty crazy. We're in a really strange situation.
Yeah, I could not agree with you more. Things are more like they are now than they've ever been before, as Ike once said. So what about real estate? Obviously, sales are coming down, refis, all that stuff. It's all coming down, the rate, the number. But does that mean that real estate's day is over?
Well, real estate's down about 8% nationally right now. The sales of new homes is down about 8% across the country. In certain places in our area, actually real estate is actually up. The interest rates are going up, and it's going to cause you to pay more for your home. But we're seeing people move to Texas by the bucketfuls, and I hope they leave their politics at home and come on down. But we're seeing our homes sales are going up. We've got several hundred units for sale in the Midland area right now, the Permian Basin. But at the same time, you're going to pay more for it because of the interest rate. So nationwide, yeah, I think we could see a real estate situation where real estate could drop as much as 10% across the country. And if that does, it's going to obviously hurt people, the real estate people, and the people that are selling and buying, because it costs you more to buy. The interest rate's going up, it's going to cost more to buy. I will say this, I'm telling my clients who have variable adjusted mortgages right now, lock it in as soon as you possibly can, because I think these things are going to go up 2 or 3 more points.
Yeah, so lock it in. You think interest rates are going higher? Yeah, so on the one hand, you have demand maybe slackening a bit, but on the other hand, you have supply, just it isn't there.
Don't just survive. Thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper-gold early-stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita copper-gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network. The information you need to thrive. Now more than ever.
Yeah, it's in most cases, you're right. In some areas in the country, the supply is still there, but I'd say 90% of the country, your supply is down. So we're seeing, and people don't understand. I mean, right now, inflation is running at 9.1%. And even if you take out the food and the gasoline, it's running over 5%. So we're looking at the highest inflation we've had in 40 years. We're looking at indications of going higher. I don't think it's going to go lower for a while. We're going to have more inflation. It's going to cost more to go to the grocery store. I went and filled my car up with gas yesterday, and I should have traded it in because it was worth more after I filled it up than it was when I filled it up. So I should have gotten my money and sold it while I had a chance. But my wife's car cost me $100 to fill with gasoline. That's crazy.
Yeah, well, it's enough to go out and make you buy a Tesla.
No, it won't make me do that. I'm going to go far against that. I know what it costs to run an electric car. Those of us who have been around the energy business in West Texas will tell you that it costs actually more to operate an electric car than it does a gasoline-powered car over a period of time because of all the things that go into the maintenance of that automobile. So if you're going to go out and buy one, you better compare the costs.
Well, what I've encountered being a Tesla owner myself for nearly a year, whereas it cost you $100 to fill your wife's car, it cost me $63 or $69 last month to go 2,500 miles on my EV.
Yeah, but we can't do that in Texas. We got too many miles to cover. And if I have to go, like, for example, I've got to go to Dallas next week. If I had one that would go 300 miles, I'd have to stop somewhere and charge it. and pay the 32 cents a minute to charge it somewhere down the road to be able to get to where I'm going. So all those, it just depends on where you live. I don't see anything wrong with electric vehicles if you live in a place where you can drive 10 or 15 miles a day. But if you're driving 40 and 50 and 60 miles a day and maybe 100 just to get to work and back, you got a problem.
Yeah, agreed there. Florida is like the perfect place for EVs. Because that most of your travels within the state, you can go from one coast to the other and back again on a one charge.
You can. That's absolutely correct.
Yeah, but yeah, that obviously is not the solution for higher energy prices until you can go 500,000 miles on a charge. It definitely
that would make a big difference, Kerry, if they could get one to that level. We're talking about building new wind programs in the Gulf of Mexico off of Texas, a 500,000 acre wind farm in the Gulf of Mexico, when only about 20% of the grid is coming from wind. And it didn't work in the wintertime when we had our big winter here 2 years ago. It just fell all apart. So I'm not a big favor of that.
Hey, but for the average Joe, for Joe's six pack or Steve Chardonnay, what are you supposed to do to get through these times here when you see your retirement account values eroding and you see job prospects going down? Still, the unemployment rate is very low, but that is a lagging indicator, as we know. What's the advice you're giving to your clients, Dee?
I'm to take part of a phrase from the Elvis movie, buckle up, Buttercup. It's going to get worse. It's not going to get better anytime soon. So you're going to have to watch out for it. Put the money in a place where we can take advantage of the downside when the market starts to move back up again. And we're doing that with a lot of our clients right now.
Hey. And so keep your powder dry effectively, right?
Absolutely. That's exactly right.
Cut back on luxuries and unessential purchases.
Yeah, and it's hard to get people to do that because people mistake unessential luxuries with things they think they need. So they have to have a rethinking of their minds. You have to I sit down with my clients and say, do you really need that or just something that you want? But you're right. We're going to have to do some rethinking about how our purchase situation is.
Exactly. Couldn't agree with you more. All right, Dee. Well, you're always a bundle of information here. If someone new came to you, a younger person, and wanted to start planning for the future, what would you recommend to them?
I would put them right now. We're looking at things that in bonds and bond-like instruments, even though bonds are kind of down, as you know, I think bonds are going to come back before the market does. We're looking to put things into a place where it is as safe as humanly possible and as financially possible in order to have the money on the sidelines where we can move it into some other things once the market does a turnaround. And it will. I think it will eventually. But I think it's going to take 6 months to a year, maybe even 18 months before we see an upsurge in that area.
All right. Well, hey, appreciate the advice, the heads up, Dee. Just tell us where we find you, how we connect with you on the web, please.
Yeah, go to dcarterfinancial.com and you can find us there. We have a website there you can take a look at and see what we're doing and how we're working with our clientele. And we'd love to work. We have clients all over the country now, so we'd be glad to work with anyone.
All right. And hey, let me know. I'm curious, how are you out there coping with inflation, with the slowing economy and all the negatives that come with it? What are you doing about higher gas prices? Are you driving less, or are you just sucking it up and taking it? I'd like to know how you're dealing with it. I'll tell you how I am. And the email address is kl@kerrylutz.com. And if you got a question for Dee, you could always shoot me an email. And don't forget, go over to financialsurvivalnetwork.com. Sign up for your free newsletter. Got one going out today. Dee, always a pleasure. Thanks so much for stopping by.
Thanks, Kerry. I appreciate the invitation.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.